While we made significant progress in the area of mitigation, as we continue to experience increasingly severe natural disasters, so adaptation is becoming even more critical. Capital investment to strengthen resilience in this adaptation area is a key challenge. And beyond that, there are many other pressing issues we must tackle to achieve SDGs.
Welcome to Trade Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance. I'm Dipesh Patel, editor at Trade Treasury Payments. Joining me today, I am delighted to have Akita-san, president of the Berne Union, ahead of the Dubrovnik meeting, the spring annual meeting of the Berne Union. Akita-san, welcome to Trade Treasury Payments.
Thank you very much for inviting me.
Thank you. Such a pleasure. So, quick introduction. Tell me a little bit about you. Who are you? Where are you from? And what is your role at the Berne Union?
I was elected as a president of Berne Union last fall in Hamburg. So this time, the coming Dubrovnik spring meeting is the first time for me to invite the people, the members, the guests of the Berne Union. I'm really excited about it. At Nexi, I'm actually responsible for international and strategic policy at Nexi. The half of my career was underwriter of the medium long-term businesses. Prior to Nexi, I was also a banker at MEFG for the project finance.
Akita-san, what are some of the core pillars of your 2-year engagement plan for the Berne Union, and how are you thinking about delivering real impact for your members?
I believe 2 years will fly by, but during that time, I see it my mission to plant seeds for future through growth for members and our industry as a whole. I set my presidential platform called STRIDE, that is consists of acronyms of sustainability, resilience, innovation, and diversity for empowerment. This is a vision statement I shared with my members, the BU taking the bold, decisive steps toward the future of lasting impact and transformation for sustainability issues. In recent years, BU members have developed innovative green products in response to climate changes. While we made significant progress in the area of mitigation, as we continue to experience increasingly severe natural disasters, so adaptation is becoming even more critical. Capital investment to strengthen resilience in this adaptation area is a key challenge. And beyond that, there are many other pressing issues we must tackle to achieve SDGs, such as basic infrastructure, water and sanitation, healthcare system, and food security, etc., etc. At the same time, as budget and operations of ODA cuts, the need to mobilize private capital has never been greater. Historically, even within BU, ECAs have played a major role in changing large-scale private investment into projects in emerging and developing countries through insurance tied to finance and investment. While our mandates may differ from DFIs, the fact remains that we have had significant impact. However, the BU and its members have not been vocal about it. Perhaps we'll be a bit modest in this particular aspect. I believe it's time we recognize ourselves more clearly as providers of powerful de-risking tools that can make a real impact toward solving SDG challenges, and that we should take on more responsibility in contributing this endeavor. For this purpose, the Berne Union needs to communicate its achievements more actively. We also need to deepen collaboration with like-minded partners In practical terms, I'd like the BU to help create environment that fosters more knowledge sharing and exchange, especially when it comes to working with MDBs, DFIs, in building up examples of blended financing, which are relevant to export financing businesses.
Thank you very much. And you will just be releasing your annual report. I think some of the key takeaways are that the industry supported a record $3.3 trillion of global trade in 2024. And there's a lot of change in the role of export credit agencies, particularly in and around helping suppliers and domestic business, not just the buyers. There's also been growing support for other industries like battery factories, green steel, and renewable energy. What, in your view, were the key take-homes and the key messages coming out of the report really themed around resilience?
As you just said, BU members recorded a historic high in new commitments reaching 3.3 trillion in 2024. Medium long-term commitments amounted around 160 billion US dollar, a slight decrease from the previous year, which was actually exceptional in recent history last year, and solid continuation of post-COVID growth overall. Amid rising geopolitical risk, we've seen an increase in ECA activity in the defense sector. This will be a continuing trend for the coming years. And last year also, the recovery in demand for cruise travel has driven strong performance in the shipping sector. However, which may change in coming years subject to future economic sentiment because demand sensitive. Other major MOT sectors from the top were infrastructure, manufacturing, and renewable energies. The long-term trend towards increasing capacity for MOT credit risk in the private CPR market is also evident, with private members of BU now contributing more than 20% of MOT underwriting annually. This development highlights one of the core strengths of our industry, an innate capacity for sharing risk and blending complementary strengths of public and private finance. Since the beginning of this year, the outlook for both short-term and medium-long-term trade transactions has become increasingly uncertain. As well as strong underwriting, the 2024 industry report shows growing levels of claims payments, including increasing insolvencies in advanced economies for short-term businesses, as well as continued elevated political claims in long-term business. The Berne Union Business Confidence Index anticipates further increases throughout the first half of 2025, as well as growing demand for risk cover. In the current international environment, politics is as much a driver of trade trends as economics, and we do not know whether there may be a black swan in financial market. In this context, Berne Union members are closely monitoring the situation. On a more positive note, compared to the time of global financial crisis, thanks to the lessons learned through this and subsequent crisis responses like COVID, ECAs today are better equipped with a broader set of tools, including untied support, working capital support, as well as mutually reinforcing cooperation with the private insurance market, which provides depth of our positions. In that sense, the industry as a whole remains remarkably resilient. If I may to extend a little bit sustainability agenda in relation to this point, I particularly like to comment on energy space.
Please.
Since the BU actually began the tracking sector underwriting, that was in 2019, new commitments to renewable energy have increased steadily and amounted to 15 billion in 2024. This is a 2.5 times the level of 2019. In the same time, we have seen a corresponding decrease in new commitments toward traditional energy production. However, inflation-driven increases in costs have deteriorated economics and raised the risk of cost overruns, particularly in offshore wind projects. This has created headwinds for new investment in that specific area, but we still expect to see continued activities in solar and onshore wind projects. Other clean energy, such as geothermal, biomass, nuclear, as well as increasingly other ancillary technologies for energy storage and carbon capture. When looking at investment in renewables, we see a heavy slant towards developed markets, Europe particularly, which is reflective of different economic financial policy conditions in other regions. There are continuing gas-related transactions, showing its critical role as a transition field. In many countries, the ruling parties lost a significant number of seats last year's elections, including Japan. Voters prioritized addressing domestic income inequality, inflation countermeasures, immigration, and social stability, while interest in transition to a green or low-carbon economy and international issues appear to have become secondary. Nonetheless, despite recent shift in the global political environment, the industry has made significant progress in recent years in both policy and shift towards transitions, delivering positive, sustainable impact. The reality of these competing socioeconomic priorities requires a pragmatic approach which can effectively align all interests, and export finance is well placed to do this by supporting the commercial viability of all transition technologies. That is including a bit of my personal views.
Thank you, Akita-san. So can you explain a little bit more about that shift away from kind of traditional biocredit to untied credit and what's driving that change?
The shift from export credit to untied finance or untied credit, it's difficult actually to provide universal explanations because the industrial structures and the export sectors vary greatly from country to country. So the driving factors behind the shift differ accordingly. Even in terms of how untied finance is being used, we see divergent approaches. Some ECAs are positioning it as a tool to support SMEs and help them to access export opportunities. Others are using it with broader political mandates to support the overseas business expansion, including not only SMEs, but also the large corporations. And also the securing natural resources, another important area for untied credit. More recently, some ECAs have been assigned even wider mandates, such as development finance, international cooperation, or diplomatic policy tools. Given the diversity in government policy objectives, I would argue that comparing ECAs across countries in terms of the untied credit has limited relevance, depending on the countries. That said, if I were to summarize this change in single phrase, I would say it reflects a growing recognition by the government of the broader value of ECA functions, not only in traditional export credit, but also in supporting various national objectives. So ECAs are now expected to play a more diverse role beyond export credit, including contributing to industry policy, economic security policy, science, technology, innovation policy, and international development. So that is the situation of this shift. That is my understanding.
Thank you, Akita-san. Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it. The private market also saw strong growth in MLT business last year. How do you see this affecting the dynamism between private insurers and ECAs?
Traditionally, the relationship between ECAs and private insurers has been one where ECAs are reinsured by private insurers, either through treaty or facultative arrangements. That is just a management risk for ECAs. So while ECAs play a role to achieve national interests, private credit insurers bring additional risk capacity for the ECAs. This type of public and private partnership works very well and is valued by our guardian authorities of ECAs as a mechanism to lessen the fiscal burden. Although the risk absorption capacity of each insurer is limited by its capital constraints, we see many new entrants to the market, and the number of private members in the BU has also been growing. The most recently, MS Amri joined at the end of last year to the Berne Union. This is a healthy and a positive trend for ECAs and the industry overall to add more risk capacity. In addition, private insurers also provide the industry with sophisticated risk analysis and flexible and innovative underwriting solutions, such as portfolio approaches, which have been less widely adopted by ECAs. This may bring more innovation to ECA's industry in the future too. So I will add other forward-looking angles for the future collaboration. In light of the point, a growing trend of ECAs engaging more untied finance, a new challenge for private insurers emerges. How well can private insurers respond to non-trade related projects? And the second is talking about the blended finance. It's also important to recognize that ECAs and private insurers may differ significantly in both risk appetite and return expectations. Like many private insurers, ECAs have traditionally provided cover for senior debt. However, if ECAs begin to take on higher level risk, particularly in support of broader policy objectives, we may start to see a divergence from previous approaches. That raises an interesting point. In what type of cases might these differences actually create opportunities for new forms of collaboration between ECAs and private insurers? Beyond the simple reinsurance arrangement, exploring such combinations where the public and private sectors take on complementary risk positions could open up new possibilities for structuring deals that neither party could pursue alone. So that is future possibilities.
It's really interesting. And I think it really, what you've said, underlines the resilience of what is quite a counter-cyclical, risk-focused industry. I want to talk about infrastructure because you talked about the growth of the MLT business and quite sizable ECA growth, particularly in infrastructure. How can we increase awareness and the uptake of PRI for infrastructure investment in developing economies? I think a recent UNCTAD report also highlighted this.
Thank you very much for asking, because PRI is not much well recognized, but it's important point. So the growing demand actually for political risk insurance will ultimately depend on the efforts of each individual institutions. We have to take more effort to be recognized. That's the first point. We have to do that. One of the fundamental questions we need to ask, why would the client need PRI? So why the offering coverage that is truly compelling is the question. And then Nexi, for example, in our case, is among the ECA one of the most active PRI providers in the market. However, even in Japan, we are facing this challenge. How to increase awareness of PRI is really challenging. Then we try to work hard to make more coverage attractive to the clients and expansion of distribution channels, working together with private insurers and ensuring prompt claim payments. So those are really the basics we have to work for to attract the clients and attract to be more recognition from the market. At the same time, when political risk actually materialize, abandoning an infrastructure project So now I'm talking about the potential use of PRI for infrastructure development. The investors, they didn't want to actually lose the project. It's really costly if they abandon the project, right? So the important thing is to avoid those severe situation consequences and what actually the government PRI can help for the investors. That is a really important another aspect. So the investors may find PRI particularly attractive from the ECA or multilaterals because they have a strong leverage to engaging the problem solving with the host country government. Bring in their networks of embassies or the home government, and also sitting together with the host country government, we can discuss with to solve the issues. So this is something additional value for the investor, particularly the long-term infrastructure investment. In the long term, we have many things happening, actually. So going together with those investors is really PRI providers, MIGA or the bilateral NEXI, PwC, Scientia, whoever. Those the bilaterals are very active. So those type of things is really we need to be more promotion to our clients and the industry related to the infrastructure businesses. And the BU also need to actually support and also facilitate those type of awareness among the industry. That is one thing I think is important.
Thank you, Akita-san. Can we talk, given your role at Nexi, we see Asian influence and Asian ECA's footprints growing. How would you see their role changing and adapting, and how might their approach influence the global landscape?
I think the Asia-Pacific regions is the world center of gravity in terms of population, economic growth, or energy. Those are toward to Asia-Pacific. So the region itself is really across the globe. Many countries are focusing on the business expansion in that region. The region has their own problems, own issues, and we need to be understood well. Because one of the point is the Asia-Pacific region, it has been grown based on the free trade flow. That is a basis of economic growth. At this stage, a bit challenging moment, but I think this is incredibly important because the global value chain among the region is very much complex and condensed. So this is the one thing, the very important aspect to see the region in the future. And another characteristic is talking about Asian ECAs. Asian ECAs, one of the characteristics and the differences from Europeans, for example, we are providing the short-term credit insurance by the ECAs. So this is important because during the financial crisis, COVID challenges, the ECAs in Asian Pacific, because of that, we could actually back up capacity constraints in the private market to make our trade flow smooth and constant. So we think the short-term credit provided by the ECA is really important. So among the ECAs, the regional ECAs, we have a strong reinsurance network as well. That was actually developed from the great financial crisis, and that is a continuously functioning. Another interesting movement in the regional ECA is originally we started in that way after the great financial crisis, but now in the nearly 20 years past, each agency developed significantly in terms like Scientia or Acacia or others, really in terms of business volume. And also their business is very much now sophisticated and very advanced in terms of digitalization or e-commerce platform. Those are really advanced. So I think those experiences, because they're coming from, to a certain extent, the short-term space, But still, we can share our experiences, regional experience with other regions or emerging countries ECAs. Those type of things, it's really the Asian Pacific ECAs can contribute to the global ECAs market. And I think that we need to be more vocal. And because we can contribute, we have ability to share, to improve our industry. So we have to take more responsibility to contribute to the industry. So I think we have a regional cooperation group in Asia among the ECAs. I would like to bring more regional cooperation group members to be more active in the Berne Union space or in other international forums to communicate more what we are doing in the market.
Thank you, Akita-san. And final question on a personal level, what excites you most about the opportunities ahead for Berne Union and also the wider export finance community?
Okay, thank you very much for asking. This is a really good question. In my view, the export credit industry seems to be at the major turning point. The international rules that have guided us for decades were created based on the circumstances of their time. And while efforts have been made to modernize them, which is certainly a positive development, there are deeper, more fundamental questions we need to consider. What missions should ECAs fulfill and how? The answers to these questions differ from one ECA to another, and there's no single right answer. The environment around ECAs has become much more complex than before, and the issues represented by the SDGs are highly multifaceted. For example, even if we focus solely on climate change, we know, especially from discussion at international forums like COP, that tackling just one issue in isolation won't solve the broader problems. These challenges can't be solved overnight. They require long-term sustained commitment. In this context, we need to consider the evolution of our businesses. It's not just about being more flexible with underwriting terms or providing new products. It's about It's about adapting a new or more fundamental shift in the environmental around us. The key question is how far and in what ways we can take on new and higher level of risks as mission-oriented finance provider in case of public agencies, and how to manage that risk effectively. I have particularly currently studying about ECA risk appetite as my PhD study. The ECA risk appetite or risk appetite concept itself is relevant to all BU members, whether you are private or public agencies. I believe this is a question that all members must keep asking themselves continuously if the agency wants to be relevant in a sustainable way. We also need to communicate our risk appetite effectively in order to enhance collaboration with other partners, stakeholders. So being able to serve as BU president at such a pivotal time is something I feel very excited and fortunate. The step I take might be small, but I hope to contribute in a meaningful way to help move the industry even a little bit forward.
Akita-san, I mean, much like the unassailable walls of Dubrovnik, Croatia, I think we need to keep remembering that the industry's resilience is built on being able to adapt, being strong, and being able to have that strategic foresight that you've talked through. And I think it's clear that the Berne Union is really helping to reinforce that, educate the market, and provide those foundations for ECAs, new and old, as we adapt into uncertain times where trade needs to stay strong and be reflective of its counter-cyclical nature. Akita-san, thank you very much for joining us ahead of the Dubrovnik meetings. It's been such a pleasure to have you on Trade Treasury Payments.
Thank you very much indeed.